The government wants to shake up the house buying process in England and Wales, aiming to save first-time buyers an average of £710 and cut about a month off the usual 6-month slog. My name is Jack Revis and welcome back to Tax Tidbits, where under new proposals, sellers and estate agents will have to share all the important details about a property up front, like the condition, leasehold costs, and whether you're stuck in a dreaded chain, so buyers aren't left in the dark until it's too late. They're also floating the idea of binding contracts, which could stop deals from collapsing at the last minute, and maybe save £1.5 billion a year in failed sales headaches. Of course, sellers might have to fork out a bit more at the start, but the government says that overall savings and fewer collapsed deals will benefit both buyers and those in property chains. Experts are saying that it's a decent step, but adding more paperwork at the beginning could slow down the market, because clearly what house hunting really needs is more admin. There's also a talk of a new code of practice for estate agents and surveyors, plus some league table style data to help you pick the good ones. Think of TripAdvisor but for conveyancers. For now, the government is asking for feedback during a 12-week consultation, so anyone who's ever been gazumped might finally get their say. A company linked to Baroness Michelle Mone and her husband Doug Barrowman has been ordered to pay back nearly £122 million after a High Court judge ruled the PPE gowns they sold to the government during COVID weren't up to scratch, or more specifically, not proven to be sterile. PPE MedPro, set up in 2020, fast-tracked through the government's VIP lane and delivered 25 million gowns in the height of the pandemic. However, testing later showed most failed safety checks, leaving the NHS saying thanks, but no thanks. The court said MedPro hadn't shown any evidence of proper sterilisation, though it did spare them an £8 million claim requested by the government to cover storage costs. The slight snag to this case is that the company's last accounts showed it only had about £666,000, so paying up could be a bit of a challenge. Chancellor Rachel Reeves insists she'll do everything to claw back the cash for schools, hospitals and communities, while Mone, who previously denied involvement before admitting she stood to pocket millions from the deal, dismissed the ruling as an establishment win. The NCA is still investigating this case, but it's yet another example of government money lost to COVID. But will it be a sum they can successfully recover? The EU is turning up the heat on UK steel by cutting tariff-free imports nearly in half and threatening a 50% tariff on anything over the limit, which UK industry bosses are calling the biggest ever crisis they faced. The move is meant to shield EU producers from cheap steel flooding in from countries like China and Turkey, but it comes at dire times for Britain's already struggling sector, especially with plants in Scunthorpe and Rotherham under government control. Industry leaders warn that this cheaper steel from other countries could instead flood the UK market, leaving struggling firms flattened like a rolled out sheet of metal. The government says it's talking to Brussels for special treatment, with Keir Starmer promising strong support, but staying frustratingly vague on the details. For UK businesses that rely on steel, from car makers to construction firms, this could mean higher costs and supply issues, potentially driving prices up and projects off schedule. London's target to build 80,000 homes a year is hitting a major roadblock. There just isn't enough skilled workers or enough people willing to train them. It's been pointed out that you can earn 6 figures swinging a hammer on a building site, but only £30,000 teaching the next generation of builders in college. So who's going to bother? Housing bosses say there aren't enough surveyors or roofers to keep up, meaning even if developers had green lights everywhere, they'd still be stuck waiting for the right hands. The government is throwing £600 million at training more construction workers by 2029, but the pay and timing for teaching roles are still lagging behind London's ambitions. Last year, only 11,600 homes were built, proving that when it comes to building, the real bottleneck isn't bricks or planning, it's people. For businesses, this skills crunch could mean a scramble for contractors, hitting everything from developers to suppliers and even companies relying on new commercial spaces. Millions of motorists who got stuck with dodgy car finance deals could soon see some compensation, though the average payouts are now pegged at around £700 per deal, down from earlier estimates of £950. We've spoken about this case in detail in previous episodes, but basically the FCA is targeting 14 million agreements from 2007 to 2024, covering undisclosed dealer commissions, unfair contracts, and misleading information that left people overpaying. The scheme will be free to use, with lenders reaching out to past and current customers to opt in, but you can still take your case to court if you fancy a legal showdown. The regulator hopes the scheme will be up and running early next year, though if your lender can't find you, it could be a slow wait. For anyone who's been waiting years for compensation, it's finally some good news, even if it won't cover that fancy upgrade to a leather interior. Thank you for joining me on this week's episode of Tax Tidbits. If you enjoyed this one, make sure to like the video and subscribe to our channel so you don't miss our other updates. See you next week.